Hello students, welcome to AffairsCloud. My name is Shashmita. We have an app by the name CareersCloud which you can go and download through the Play Store. Once you have downloaded the application, you will easily be able to log in using your Gmail ID. And once you have logged in, you will be redirected to this page where you will be getting this UI. And there will be option for home, all courses, my courses and download section in this application. You will be getting multiple PDFs, multiple content on daily basis that will be enhancing your learning. Under Crack Current Affairs, you will be able to see multiple options. First one is Current Affairs English. We upload the day-to-day basis news in the English format. And apart from English PDF, we also provide them in Hindi format. And this banking awareness, we upload a PDF every month. So this PDF will contain the banking news, banking and the finance news of that respective month. And Current Affairs Exam PDF will have two categories. One is that most important news of that particular month will be uploaded in this Current Affairs Exam PDF. And also Exam Perspective PDF will also be uploaded. And next is Special CA. This will contain Union Budget, Economic Survey, and also the most important events that had taken place globally as well as nationally. And next most important is topic wise. So the entire news of that particular month will be segregated into different topics. And in order to recollect whatever you've read, we also provide you with topic wise quizzes. Apart from that, we also provide state current affairs. Now, here if you see, we provide you with the day-to-day PDF, and this we provide you with the weekly PDF. So that particular week news will be compiled into a PDF and in question and answer format in English and will be uploaded here. And to enhance your learning, you can also, to enhance and strengthen your learning, you can also attend the quiz. Here we provide you with the entire news of that particular week. But here we take the top 60 most important news and we upload it in this PDF in question and answer format. Apart from weekly, we also provide you the monthly ones. This PDF will contain detailed view of that particular month news. And this will have a brief format of the same news. This will be in the form of a question and answer format, and this will have the top 100 question and answer of that particular month. We also provide you with the PIB news on a day-to-day basis, which you can go and read in these particular tabs. Apart from that, we also provide the Union Budget and Economic Survey. You can also attend after reading the PDF, you can also go and attend the quiz. This is available in the Special CA category. We also provide state level current affairs. So this will be very helpful for students who are preparing for state level exams. For example, if you are preparing for Tamil Nadu state level exams, then you can click this tab and you will be able to see all the current affairs or news related to Tamil Nadu. Apart from that, we also provide PDF from the exam perspective. Suppose you are preparing for RBI Assistant Mains, then this tab will contain 5 to 6 months of current affairs, which has high probability of being asked in RBI Assistant Mains. Similarly for SBI PO, RRB PO, Clerk Mains, all these are being given under this section. And also we provide separate content-wise, topic-wise current affairs like national affairs, government schemes, international affairs, banking and finance, economy and businesses, MOUs and committees and meetings. All these different types of news are segregated in these particular categories. Hello students, welcome to our new initiative. In this initiative, we will be uploading the weekly current affairs on banking and finance section. So this will be uploaded on every Monday. And so on the whole, per month, you will have totally 4 videos related to this topic. And apart from just providing you with the banking and finance news, we also provide you the conceptual explanation so that this will enhance and also strengthen your knowledge about these topics.
Today, we will be covering December 3rd week banking and finance awareness news. Moving to the first news. The first news is about the foreign direct investment equity inflows into the country, and this data has been released by the Government of India. So according to the Department for Promotion of Industry and Internal Trade, which works under the Ministry of Commerce and Industry, it has only released this data. The foreign direct equity investment, it has increased by 45% at $29 billion in the first half of the financial year 25. So this increase in foreign direct investment equity flows comes after a contraction in the 3 consecutive years, that is financial year 22, 23 and 24. So if you see, in these 3 years, there was a contraction of foreign direct investment, that is compared to the previous years. The next year, the investment was lesser. But now if you see the first half itself, it was 45% more than the previous first half. The gross FDI inflows reached 1 trillion since April 2000. So if you see the foreign direct investment, it is very, very important for the growth of the country. So it not only brings in money, but also provides an n number of employment opportunity, which is very, very important. With it, it also builds the infrastructure even more. So when the foreign direct investment in a country increases, it shows that the world has confidence in that country. The abroad countries who are investing in India, they have confidence that the country will go. Our investment will be useful for the country and as well as for the investment purpose, investment people. So this shows the confidence in India, which is a very, very good sign. So as per the data, total FDI, which includes equity capital of unincorporated entities, reinvest earnings and other capital, it witnessed 29% increase at 42 billion during the first half of 25. The data show that Singapore again emerged as the top investing country in India with USD $7.53 billion FDI during the April to September 2024. So if you see in the first half, 7.53 billion has been invested by Singapore and it has gained the topmost position, followed by Mauritius, Netherlands, UAE, and in the fifth place you have USA. So the highest FDI equity inflows was into the service sector, which includes the financial, banking, insurance and the R&D. And the second is computer hardware and the software. Data showed that the FDI equity inflow into the pharmaceutical sector has registered over four-fold growth to $520 million compared to $117 million during the same period. So if you see in the first half of 24, it was just $117 million of investment into the pharmaceutical sector, whereas now in the first half of 25, it has been increased to $520 million. Next is that ADB and NAF signed letter of intent to address the India's infrastructure funding gap. So if you see NAF, it was introduced early in 2021. So main thing is it will fund the infrastructure projects happening in India. The main purpose is that generally the infrastructure projects, they are funded by the banks, right? So when these infrastructure projects, they happen to have a long term. So you know that to construct a highway or road, it takes years. It takes 10 years or 7 years or 15 years. So for that long period, the funds of the banks will be blocked. So it will be a huge sum and that will be blocked for a single person. And also mostly they will have a long moratorium period also. So they will not have any inflow also. So no inflow will be there for the banks and the funds will be blocked for a long time period. So in order to ease that thing for the banks so that they can use that fund for other useful purposes, like if you want, they can provide it to give it to any industries or MSMEs. So to make it use it for other purposes, NAFED was introduced so that NAFED can give long-term funds for this infrastructure creation, and banks, instead of giving money to these infrastructure projects, they can use it for any other purposes. So now if you see ADB and India's National Bank for Financing Infrastructure Development signed a letter of intent to boost their financing for the country's infrastructure sector for the sustainable development. ADB will give NAFED a technical grant to improve its capacity and climate finance to address the funding gap in India's infrastructure sector. NAFED is a specialized development financial institution aimed at supporting the country's infrastructure sector, which can significantly gain from enabling credit flow by means of attractive instruments and channelized investment. So remember, NAFED was mainly introduced to support the country's infrastructure sector. Next is ADB approved a $500 million loan for India's green infrastructure. So now ADB will provide $500 million loan to India Infrastructure Finance Company Limited to support India's infrastructure projects in areas such as energy transition, urban development, education and healthcare. And also ADB will provide 789 million loan to develop Amravati. Amravati, we know that it is the new capital of Andhra Pradesh. So in order to develop Amravati as a green smart capital city with world-class infrastructure, ADB will provide $788 million. $789 million. The loan will be provided in Japanese yen with a total value of $121 billion. The Amravati Inclusive and Sustainable Capacity Development Program aims to transfer Amravati into a growth hub. We also read in I think last week only we read that World Bank and ADB has provided in principle approval to fund $1,600 million for the development of Amravati. So next is SEBI announced expansion of T+0 settlement cycle for the top 500 stocks. So as per the SEBI's direction, optional T+0 settlement cycle will be made available to the top 500 scrips in terms of market capitalization as on 31st December 2024. So as per the market capitalization, what are the top 500 stocks? Scrips, nothing but stocks. Those will have the option of T+0 settlement cycle. So all the provision related to the availability of eligible scrips will come into effect from January 31st, 2025, while provision related to qualified stockbrokers, custodians, it will come from May 1st, 2025. So at present, the T+0 settlement cycle is available for 25 select stocks that include State Bank of India, ONGC and Bajaj Auto. So this mechanism, it was introduced in March 2024. Now, what is this T+0 settlement? Currently, we are running on a T+1 settlement, which means that if a buyer places an order of buying a share in the stock market on T day, then his shares will be credited on the T+1 day and the seller will get his money on the T+1 day. Share will be credited to the buyer's depository on T+1 day and money will be credited to the seller's account on T+1 day. So it will take at least 1 day for the entire settlement to take place. Now this T+0 day means that the same day while you put the buy or sell order, the same day the shares will be credited to your account or the money will be credited to your account. So that is T+0 settlement. The settlement will happen, the entire settlement will happen on the very same day when you place the buy or the sell order. This is the T+0 settlement. And this T+0 settlement will be available for the 500 top companies from December 2025. Sorry, from January 2025. So SEBI has allowed all stockbrokers to participate in optional T+0 settlement cycles, and they are further permitted to charge differential brokerage for T+0 and T+1 settlement cycle within the regulatory limit. So if you see, obviously the brokerage charges will be different for a T+0 and the T+1 settlement, but it has to be within the overall regulatory limit. The stock exchanges will introduce a mechanism for block deal window under the optional 10+0 T+0 settlement cycle. This mechanism will be available only for the morning section, that is during 8:45 to 9 am. So this block deal is nothing but when they buy huge, really very huge amount of shares from the market, then it is considered as a block deal. This block deal window, it is open twice a day. One is 8:45 to 9 am. The other is 2:05 to 2:20. So, but for this T+0, it is only open in the morning. That is from 8:45 to 9 am. So SEBI has directed the qualified stockbrokers with a minimum number of active clients as of December 2024 to put in place systems so that the clients can participate in the T+0 settlement cycle. SEBI has given a 3-month time period to new qualified stockbrokers to put in system complying with the T+0 process. Next is SEBI mandated mutual fund companies to process the cancellation of SIPs. See, suppose your SIP is 10th of every month and you give a cancellation on the 1st. Okay, you give the cancellation on, say, some on 3rd. So you tell the bank that do not process my ECS. You tell the mutual fund company also cancel my SIP. But generally, currently it takes almost 10 days to cancel the SIP. So on 10th, you give your notice on 3rd to cancel the SIP to the mutual fund company, but the cancellation will happen only on 13th. So the 10th SIP will run. There will be a trigger for the ECS on the 10th. So when the customer does not have funds in his bank account, because the customer will that I have given the cancellation, so why should I have amount? So he will think that SIP will not happen on the 10th of that month. But usually since it takes 10 days, the SIP will happen on the 10th. So when the ECS is triggered, and if the money is not there in the bank account of the customer, then what happens is that charges are debited because ECS will bounce back, right? So in that case, charges will be debited from the customer's account. So it is an extra charge for the customer account. So in order to reduce that financial strain for the customer, this cancellation period is planning to be processed in less than 2 days compared to the previous 10 days. So SEBI mandated all mutual fund companies to reduce the processing time for cancelling their systematic investment plans to 2 working days from the previous 10 working days. This new timeline for the cancellation of SIP has come into effect from December 1st, 2024. So irrespective of whether the SIP was registered online or offline, the timeline is same. That is, from 10 working days, it has to be reduced to the 2 working days. And also, investors can cancel their SIP through website of AMC, register and transfer agents, exchanges and other channel partners also. So while submitting requests for cancellation of SIP, investors are required to select a reason from the predefined list. And also the new guidelines enable the investors to pause their respective SIP in case they face temporary financial constraint. So generally this was not available. Suppose you have SIP is that it gets debited every month, right? Suppose you don't have money for this month and for the next month. In that case, you have an option to pause the SIP for 2 months. And then from the 3rd month onwards, you can restart the SIP. That new provision has been enabled. Next is gross NPA of public sector banks declined from 14.58% in March 2018 to 3.12% in September 2024. So this data has been released by the Ministry of Finance. So we know that NPA is nothing but non-performing asset. So these are bad loans, which means that these are loans that do not provide, that do not repay their interest or principal. So when the account holders, when the loan borrowers do not repay their interest or principal for straight 90 days, then that loan becomes an NPA. So these are not good for the bank. These affect the financial thing of the financial system. These weaken the banking. So that is why it is very important to control the NPA and also to reduce the NPA. So if you see, there are 2 terms that you have to know. One is gross NPA. The another one is net NPA. So when does a gross NPA become a net NPA? When you make the provision. Say suppose currently a bank A, it has a gross NPA of 100 crores. And this month there has been another new NPA added which is worth of 3 crores. Okay. And after 3 or 4 months, the bank, it makes a provision of 3 crores. So if you see, when this 3 crores is added, it becomes 103 crores. The gross NPA becomes 103 crores. And when the bank later makes a provision of 3 crores, but how does this bank make this provision? It takes the money from the profit. So this 3 crores is debited from the profit and it is moved through the provision. So how do they make the provision? They remove the money from the profit of the bank and make this separate provision. So when this provision is made, what happens is that it becomes the net NPA, it becomes 100 crores and not 103 crores because a provisioning has made. So remember, when a provision is made for a NPA account, then the net NPA reduces. That is the difference. Gross NPA, they do not have any provision. Net NPA, they do have provision. That is the difference between gross NPA and net NPA. So according to the Ministry of Finance, official data released in the December 2024, the gross NPA of the public sector banks have decreased from 14.5% in March 2018 to 3.12% in September 2024. The main reason for NPA reduction is the 4 R's, that is recognition, recapitalization, resolution and reform undertaken by the Government of India. The data revealed that public sector banks have reported the highest ever net profit of 1.41 lakh crore during the financial year 24 compared to 1.05 lakh crore in the financial year 23. The public sector banks, they have registered a net profit of 0.86 lakh crore in the first half of the financial year 25, and the public sector banks, they have paid a total dividend of 61,964 crore during the last 3 years. And the capital risk asset ratio of the capital risk adequacy ratio of the public sector banks, they have improved by 393 basis points from 11.45% to 15.43%. We know that the capital adequacy ratio that has to be maintained by the public sector banks as per the RBI norms is 9%. And now the banks are maintaining 15.4%, which is very, very comfortable. The gross advances of the scheduled commercial banks, it has increased from 61 lakh crore during the 2004-14 to 175 lakh crore in the March 2024. So if you see the key initiatives led by the government of India to strengthen the financial inclusion is that introduction of the Jan Dhan accounts. So we know that around 54 crore Jan Dhan accounts have been opened, and over 52 crore collateral free loans were provided under the Stand Up India, PM Swanidhi and PM Vishwakarma. And if you see under the Mudra and the PM Swanidhi, around under Mudra 68% beneficiaries are women, and under PM Swanidhi 44% are women. The bank branches increased from 1,17,000 to 1,60,000, and around 60% are located in the RUSU area, that is rural and semi-urban area. And if you see the KCC scheme, so this was introduced in 1998 to provide operation credit to the farmers. So if the farmers wanted money for their harvesting activities, for the production activity, to buy the agricultural input, for that this KCC scheme was introduced. Remember the year, it is very important because these kind of years are when it was introduced. These kind of questions are now asked in the banking exam recently. Recently also, if you see TRETS, they had asked when was this TRETS introduced. So it is very important to know the year also. Don't miss even one single data. So KCC scheme, it was introduced in 1998, and as on September 2024, if you see the total number of operative KCC accounts were at 7.71 crore with total outstanding at 9.88 lakh crore. The data showed that as on 31st March 2024, total MSME advances was at 28 lakh crore with an annual growth of 17%. And next one is the welfare measures for the public sector employees. So with the implementation of the 12th bipartite settlement, the bank employees received a 17% hike in the salary and allowances, including a load of 3%. The Staff Welfare Fund is a fund allocated by the public sector banks for the welfare related activities of working and retiring employees for public sector banks. And also the Staff Welfare Fund was last revised in 2012, and since then the combined maximum annual expenditure of this fund for all the 12 public sector banks has surged from 540 crores to 845 crores. The next news is about a scheme that has been launched by the LIC for the economically weaker students. So LIC has launched its Golden Jubilee Scholarship Scheme 2024 to assist the students from the economically weaker families in accessing higher education. So this will support students enrolled in government universities or in private universities who will take the courses technical, vocational as well as the integrated courses. The scholarship amount has increased by up to 100% compared to the 2022 scheme. So this scheme, it provides two types of scholarship. One is general scholarship, the other one is special scholarship for the girl child. So under the general scholarship, the scholarship will be provided for the entire duration of the course, and in case of special scholarship, this will be provided for 2 years under the special girl scholar, subject to the candidate fulfilling the eligibility criteria. So if you see under the general scholarship, the eligibility is that it is open to students pursuing undergraduate studies or equivalent courses in government or private institution, and the candidate must have scored at least 60% mark in their last qualifying examination. The total annual family income should not exceed 2.5 lakh, but there is an exception when there is a woman is the sole breadwinner. In that case, it can go up to 4 lakh. In case of scholarship amount that is being provided under the scheme is that in case it is a medical course, then 40,000 per annum dispersed in 2 installments, that is 20,000 each. The eligible courses are MBBS, BDS, Bachelor of Ayurvedic Medicine, Bachelor of Homeopathy Medicine. And in case of engineering course, it is 30,000 per annum, 15,000 in 2 installments. Remember, medical course is 40,000, engineering course 30,000, which includes BE, BTech and Bachelor of Architecture. And in case of other fields, then it is 20,000 per annum with 10,000 in each disbursement. And in case of special scholarship for girl child, an amount of 15,000 per annum will be awarded to selected girl child for special scholarship after the class 10 for pursuing higher studies, and it will be made in 2 installments of 7,500 each during the duration of the course. So next news is about the GSDP, that is Gross State Domestic Product. So the National Apex Chamber, the PHD Chamber of Commerce and Industry, revealed an analytic report titled States Performance Indicator Report And in this report, if you see, the report had highlighted that the India states have shown strong economic recovery post COVID-19, with 25 states achieving more than 7% growth in the gross state domestic product during the financial year 22 and 23. Among them, 17 states achieved more than 9% growth. So, which is 7% is also a very good number, and 9% is an extraordinary growth, and which was seen in the 17 states in India. So if you see Gujarat, Kerala, Telangana, Rajasthan, West Bengal, Bihar, Karnataka, Uttar Pradesh, Haryana and Odisha, they have stood out there for their strong economic performance during the financial 22 and financial 23. The top performed states in the GSDP growth during the financial 22 and 23 based on the key indicators they are, if you see under the agricultural production, Punjab, Haryana and Uttar Pradesh are the top performers. In case of mineral resources, Chhattisgarh, Madhya Pradesh and Odisha are rich in mineral resources. And industrial and technological advancement, it is Maharashtra, Gujarat and Karnataka. Under tourism, it is Kerala, Rajasthan and Goa. In case of infrastructure, it is in Tamil Nadu and Andhra Pradesh. And in case of renewable energy projects, it is Rajasthan and Gujarat who are leading the renewable energy initiative supporting India's sustainable development goals. And in case of education and healthcare innovation, it is Kerala and Tamil Nadu. So the PHDCCI provides a 9-pronged strategy to accelerate the state level growth, driving India's progress towards becoming a Viksit Bharat. So what is this 9 strategy? Enhancing the ease of doing business. That is, if there is too much of rules and regulation, too much of compliance, then it will become very difficult to enroll into that business. So reducing the complaints, reducing the rules and regulation only will enhance the business. That is the enhancing ease of doing business, reducing the cost of doing business, boosting infrastructure development, fostering sustainable growth, stimulating growth in the services, strategizing to boost exports, promoting skill development and innovation, investment and health and education, adopting and sharing state best practices. Just have a go through. That's it. You don't have to remember all this 9, but just read 2-3 times. You know the main keywords.
We have launched a new course called Static Banking Awareness course. Now this course will be helpful for students who are preparing for the banking exams and for the regulatory body exams. And also recently you would have seen Paytm Bank in news frequently. So when an aspirant reads this news, he would have ample number of questions like what is a payment bank, what are the norms for it, and which is the committee that has launched it. So this Static Banking Awareness course lays a foundation to the current banking and finance news. Now you have to download our AffairsCloud to access this course. Once you have logged into our app, you can go and click this all courses icon, and then you'll be redirected to this page. In this, you have to go and click the Static Banking Awareness course, and under the details tab, you will be able to see a brief about this course. And under the part tab, it will contain all the contents, all the topics of the contents that are currently available in this course. We are working on this continuously, and this will be completed within 2 months. Under the free tab, you can go and access one content, that is the origin and development content, for free. You can go and read this content and have an idea about this course. After reading this content, do attend the quiz that is also available under the same tab. Now, our team has allocated ample amount of time and resources to curate this content. We have created this content from various books and from various verified websites. Our content is better than any book that is available in the market. This is because we update this content on a dynamic basis. For example, there are currently 39 DRTs that are available in the country now. In future, if one more DRT is created or added, then it would become 40. So we would update this content on a dynamic basis. But in case of books, you have to wait for the next publication for this updated content. Nowadays, a lot of practical questions have been asked in the banking exams. For example, how many public sector banks are available on the stock exchange? Which is the payment bank that is being listed on the stock exchange? So we try to cover as many practical questions as possible in this course. Apart from this, we also provide you a question bank that will contain around 3000 questions and the previous year questions along with it. We also have a dedicated tab that will release the important RBI notification and the frequent news released by the RBI. You can use this code B15 to avail 15% discount. This is one of the highest discounts that we have offered until now. So do avail this code B15 while you purchase the course.
The next news is about two new schemes that has been offered by the Bank of Baroda. So if you see, the first one is called as the Baroda Mahila Swalambam. So the scheme is designed specifically to support the women entrepreneurs. So the competitive interest rate starts at 9.15% and the loan ranges from 20 lakhs to 7.5 crore. And no additional collateral security is required for loan up to 5 crores, and the eligible women entrepreneurs will get significant benefit, that is 50% discount on the processing charge, and loan term is maximum for 120 months. Next one is designed for the MSME, that is registered MSME, the Baroda Smart Overdraft. So digital OD facility targeting the GST registered MSMEs. So they can avail OD facility ranging from 50,000 to 25 lakh. The Baroda Smart OD will use technology driven assessment based on the GST written banking activity and online transaction. So remember the two names, Baroda Mahila Swalambam and Baroda Smart Overdraft. Next is that IDFC First Bank launches India's first AI-powered holographic digital avatar of Amitabh Bachchan for the customer engagement. So this was launched at the bank's Juhu branch in Mumbai. And if you see, this initiative aims to IDFC Bank's First Bank's commitment to its digital first strategy, setting a new benchmark in customer service and engagement in the banking sector. Remember, it is IDFC First Bank who has launched a digital avatar of the Amitabh Bachchan. Next is about the appointment. So the Ministry of Corporate Affairs appointed Vaibhav Chaturvedi as the ex officio member of the Insolvency and Bankruptcy Board of India. So Vaibhav Chaturvedi is the CGM Credit Risk Regulation at the Reserve Bank of India. The IBBI, established under the Insolvency and Bankruptcy Code of 2016, plays a vital role in the implementation and enforcement of the code. Its primary objective is to oversee the insolvency and bankruptcy process, promoting transparency, accountability and efficiency. So remember, it is Ministry of Corporate Affairs who appoints the ex officio member of the IBBI. Next is about HSBC. So HSBC in India, collaboration with the MasterCard, launched HSBC Bright, a premium credit card designed for its global private banking clients. The card aims at high net individuals and ultra high net worth individuals, offering exclusive caters to the entrepreneurs, professionals and their families with investable asset exceeding $2 million. HSBC Prime was first introduced in Hong Kong October 2024 and will be rolled out in other markets globally. Remember, it is HSBC India in collaboration with MasterCard launched HSBC Prime. Next is about GDP forecast. So the ADB, it has lowered the GDP forecast for the financial year 25 from 7% to 6.5%. So first, initially it had projected 7%. Now it has reduced to the 6.5%. And also for the financial year 26 also, it has reduced to 7% from 7.2%. So remember the latest GDP projection, it is 6.5% for financial year 25 and 7% for the financial year 26. It has retained the India's inflation forecast at 4.7% for the financial year 25 and 4.3%. It has reduced the inflation projection for financial year 26 to 4.3%. So the ADB Board of Governors, they have unanimously elected Masatu Khanda as the ADB's 11th president. Remember the name, Masatu Khanda. So next is about an agreement signed between the ICICI Bank and the CBA. So if you see, the Mumbai-based ICICI Bank Limited has signed an MOU with the Commonwealth Bank of Australia to enhance the trade and business collaboration. The bank will assist customers migrating to Australia and India with banking services and will also support cross-border payments. Remember, it is ICICI Bank and the Commonwealth Bank of Australia. Next is also about a GDP forecast. So the S&P Global Ratings, it has kept the rating unchanged at 6.8% for the financial year 25 and it has raised the GDP forecast to 6.9% for the financial year 26. Remember, for financial year 25 it is 6.8% and for the financial year 26 it is 6.9%. The report has estimated that the retail inflation will decrease from 4.5% in financial 24 to 5.4% in financial 24 to 4.5% in financial 25, and it will again increase to 4.6% in financial 26. So it is from 5.5% to 4.5% to 4.6%. This is the inflation projection by the S&P Global Rating. The president of S&P Global Rating is Martina L. Chung. Next is Edwilis Mutual Fund launches India's first ETF for capital markets and insurance sector. So this exchange traded fund will invest in capital markets and insurance sector, and the percentage, if you see, out of the total portfolio, 47% will be invested in capital markets and 52% will be invested in the insurance sector. So this aims to replicate and track the BSE capital markets and insurance total return index. Next is Bob Card launches Tiara Card credit card for the women. So the Bob Card, which is a subsidiary of the Bank of Baroda, it launches a unique women-centric Tiara credit card designed to support and empower the women. The joining and the annual fees will be 2,499 with the GST, and the joining fees can be reversed if the spending is more than 25% within the first 60 days, while the annual fees can be exempted by spending 2,50,000 within the year. The MD and CEO of Bob Card is Ravindra Rai. The next news is also about a GDP forecast by the Fitch. So the Fitch rating has lowered the India's GDP forecast by 60 basis points to 6.4% for the financial year 25 from its previous estimate of 7%. So remember, now the estimate for the financial year 25 by the Fitch rating is 6.4%, and for the financial year 26 it has raised it to 6.5%. Remember it is 6.4 and 6.5%. The economic survey released in February 2024 had projected India's GDP growth between 6.5% and 7% for the financial year 25. So next is a loan agreement between the Government of India and the KfW Germany. So if you see, the Government of India has signed a 3,044 crore loan agreement with the Germany-based Investment and Development Bank KfW, marking the 100% financial closure of the phase 2 of the Bengaluru Metro Railway project. So this money will be used for the Bengaluru Metro Railway project. Apart from 3,000 crore, a 9,000 crore has also been secured. It has been secured from the Japan International Cooperation Agency, Agence France de Development, Asian Infrastructure Investment Bank, that is AIIB, and the European Investment Bank. So altogether, the total cost that has been promised to provide for this Bengaluru Metro Railway project is 12,141 crore. Out of this, 3,000 crore will be provided by the KfW Germany, and the remaining 9,000 will be provided by these four organizations. The Bengaluru Metro Railway project, also known as the Namma Metro, will support the Government of India in expanding the metro rail network in the Bengaluru. With an operational length of 76.95 km, it stands as the second longest metro network in India, surpassed only by the Delhi Metro. So next is, if you see, the RBL Bank and the Bajaj Finance ended the co-branded credit partnership. So now onwards, they will not together provide this credit card. It will solely be by the RBL Bank. So the Mumbai-based RBL Bank and the Pune-based Bajaj Finance Limited have decided to end their 8-year partnership for co-branded credit cards due to changes in synergies. So while the co-branded credit cards already issued, they will still enjoy the same benefits. So which are already in issue, which has not reached the expiry date till, that will still be enjoying the same benefits. When the time of renewal has to happen, in that case, that will be reissued as a RBL Bank branded credit card and not as a co-branded credit card. So when the expiry is near, when the expiry has reached, that time during the renewal, it will be reissued as the RBL Bank branded cards.
Thank you for watching the session. I hope you had enjoyed it. We're also available in Telegram under the name AffairsCloud_official. We also have an Instagram handle. Apart from this, you can contact us directly on 9677333862 regarding any courses that we offer or regarding any payment issues. You can contact directly on this number. Thank you.